And you've tuned into the Short Vol Show live from Orleans, Massachusetts, and the volatility capital of Cape Cod. Here you have reached Trader Talk and the Short Vol Show live. I'm your host, David Lincoln, and we have an exciting show today, so stay tuned. Welcome to the Short Vol Show Live. My name is David Lincoln, and what a day we had yesterday. I had the liberty yesterday to be able to sit and watch CNBC all day, and wow, I tell you what, I have a lot of disagreements with a lot of stuff they say on there. I think I can do a better job. Anyway, a lot of it just bugs me what people say about the Fed and how they just pile on and trash talk him. And I think part of that is because there's the urge when you come on as a guest there to think of something clever to say or something. I'm not sure, but I think it's kind of harsh that everyone's just throwing the Fed so much under the bus. And, you know, it's all just because the market sold off those 2 days. And that sell-off could have been pretty much unrelated to what the Fed did or said, and I think they're too harsh on him. One thing that people were saying, which I disagreed with, was that the Fed didn't recognize that unwinding QE would have negative effects on liquidity in the market. Of course, the Fed realizes that, and I think people just tried to find parts of the speech that could possibly have moved the market lower and then just pick on those and say those were the reasons that the market moved lower. And that's not necessarily the case. The market might have moved lower without those words and what the Fed said. And, you know, I think that it sounds like Kramer also like totally sort of changed his view and came up with this, you know, he says stuff that's outrageous just to kind of, you know, get the spotlight on him and you know, saying, oh, the Fed's totally wrong and all this stuff. It's just not true. I think the point that a lot of people are missing is just that the Fed feels like they should say positive things because they feel that saying positive words, that they're not worried about the economy and stuff like that, will help to stabilize the economy and will help consumer confidence. If the Fed has a confident voice and isn't concerned about you know, the economy going down, then that will help stabilize the market in his mind. Now maybe that didn't work, but you know, to say that like the Fed didn't notice that the markets are going lower and it doesn't care about that and all this stuff is just not true. Of course they care about it, but they sit behind closed doors and they say, what should we show the public? What should our public stance be? And they move from there. Of course, they notice about QE, and of course they notice when the market goes down. You know, it reminds me of an old girlfriend of mine, what the market wants. Somebody said something on CNBC that was very true, I think, yesterday, and that's that, of course, the market wants, instead of a rate hike, the market wants to lower rates. It's kind of like if you have, you know, my old girlfriend, I'd say, okay, I'm going to give you $100 a week. If she, you know, she would say, well, why can't you just give me all four weeks today? Why don't you just give me the whole month's money today? And when that's done, why don't you just overdraw your account and give me that money as well? You know, of course, the market wants, you know, to lower rates all the time. They want free money all the time, and they want whatever will make the market rally today is what the market wants. But that's not necessarily what's best for the economy. What each individual trader wants for their portfolio for the market to rally today is not what's best for the economy. And it takes somebody who's a little bit removed from that, like the Fed, to sit there and say, no, you're not getting all your allowance today and next year's allowance, and we're going to withdraw and overdraw the account, and we're just going to give that to you today. And, okay, the market doesn't like that sometimes, but that's the kind of restraint that we need. We need an adult in the room with the economy sometimes to say, stop, we're not just going to give free money forever. We're not going to stimulate forever and just drive the United States into more and more debt that we're underneath. Just continuing the QE and continuing to print money that we don't have, that's what's going to lead to the fall of the empire. People talk about the United States going down like the Roman Empire went down. Well, how does that happen? That happens by never raising rates and just printing more money and just raising the balance sheets that the Fed has forever and ever and stimulating the market forever and ever. That's how that happens. And having somebody to come in and say, look, we have a schedule of when we're going to raise rates. The economy's doing okay right now, so we're going to raise rates. And, the market cries and kicks its feet and says, no, we don't want to do the responsible thing. We want just free money forever. And the market goes down a little bit. Well, too bad. There needs to be some sort of adult in the room here, and that's what the Fed is doing. And I think it's irresponsible for people to come on after the fact and say, the Fed doesn't get it, the Fed's wrong, we want rate cuts now. It's kind of like when you interview anybody about, what they want from the budget. Of course, all the farmers are going to say more money to farms, more money to farm subsidies. All the military is going to say raise the military. And there has to be somebody there that says what is best for everybody and what's best for the country moving forward. And you need to step above your immediate situation and look at what's best for everybody overall. And in my view, it's best for everybody overall if when the economy is doing okay, which it is now, you can say it's doing a little worse or a little better, but it's doing okay right now, to normalize interest rates and to start paying back some of this money that we essentially borrowed through QE and get it off the balance sheets of the Fed. Now, they've got billions of dollars on the balance sheets, and they're not going to be able to take it all off, but it needs to go in the right direction at some point, because if not now, when? When the economy is going downhill, when unemployment is way up, nobody likes belt tightening, but the time has to come at some point for the belt tightening. The time has come for the market sell-off, and the time has come for belt tightening. And yeah, people are going to kick and scream, but there has to be an adult in the room here. And the talking heads coming on and just saying the same thing, how the Fed doesn't get it over and over again. The Fed gets it. It can't be that everybody just makes money in the stock market forever and ever, and it goes straight up, regardless of, what the cost is overall for everybody. Remember, the stock market is a vehicle of essentially the way rich people make money. There is the rest of the country and the rest of the economy to think about besides just the rich people of the country. Anyways, I'm going to get off my soapbox here and get on to volatility. So let's do that. All right, so let's take a look at what happened yesterday in more specific terms. And as I was tweeting about a lot yesterday, we had the VIX down and UVXY up. In fact, UVXY got up almost to 95. And the reason for that is the futures converging with the VIX. And even now, if we look at it, although it's not really reflected in UVXY price because of the difference between 4 and 430, futures are up like 27 cents, 17 cents, with the VIX down right now. What do I mean by the difference between 4 and 4:30? Well, the general market closes at 4 o'clock in the afternoon, but volatility products and thus UVXY, VXX, underlying and options close sometime after 4:15 every day when they do a rotation. And thus, depending on what sort of platform you use, you may get prices ending 4 or ending 4:15 or ending sometime in between. And thus, it can be a little screwy when you look at prices, closing prices and opening prices on these products. So like, for example, right now you see the futures up a little bit, but UVXY barely up. And before you had the futures up, but UVXY down, and that was just due to the fact that it actually closed slightly different from what it shows the closing marks for from yesterday. And that happens all the time, and but it does bounce back and forward, and it's not like, nothing's being created or destroyed there. It's just a common feature of volatility products that people get confused of the closing marks. These brokerage, they automatically mark everything at 4, even though UVXY should not be marked until once it's closed sometime after 4:15. All right, so have we reached the top in the VIX? I came on yesterday and said I thought we had reached the top in the VIX, although we may have not reached the top in UVXY because futures are converging. And indeed, we did not get a new high in the VIX yesterday. If I pull the 5-day chart for the VIX, we can see that yesterday we got up just below 34. I'm in the way here. Let me move out of the way. We got up to just below 34, whereas the session before we got up to 36. However, compare and contrast with the UVXY page here, where UVXY made new highs yesterday by several points, by like 3, almost 4 points. And that, once again, due to the fact that there's a huge spread between the spot and M1 futures, the front month futures. Some people call that the roll yield being inverted. There's different names for it, but essentially these two have to come together at some point, some way, somehow, whether it be the VIX price moving down to meet the futures, which is kind of like the most likely thing right this second, or the futures moving up to meet the VIX. And the longer they stay apart and the bigger the spread between them, the more pressure there is for the futures to converge. Remember, the VIX is a fixed number, it's based on a strip of options in the SPX, and it's a fixed number based on a formula. There's no pressure on it to move. It is what it is based on the formula. However, the futures are free flowing and can move around. I had some questions about, when people start learning about the VIX and VIX term structure, they say, wow, are there other futures that act like this? And generally, the reason that there's such a spread and such movement and such, frankly, exciting trade in the VIX term structure is because there is no arbitrage between cash and the futures. There's no way to bring these back in line easily, because if there was a way to bring these back in line easily, people would sell the VIX and buy the futures until they were back in line. You could essentially sell one for 29 and buy it back for 25 until things were back in line again. And that's what people do in the SPX or NDX or other futures. Is there is an arbitrage. There is a way to buy baskets of stocks or to buy the commodity to bring the spot and the futures in line with one another. There is no such instrument with the VIX, which makes it, which is the reason why it moves so far apart. Now, some other commodities exhibit contango, such as oil, because of their storage costs for a barrel of oil. But in general, like the S&P futures, there is an upwardly sloping curve, but it's generally based on cost of carry, that being the interest needed to borrow money to buy a future farther out versus the interest needed to borrow money to buy a future closer in. That's what makes the VIX very unique, and that's why we follow the term structure and why there can be an entire show based on that term structure. So what do we have going on today? Well, we see the VIX and the spot and the futures converging with each other. We've got the VIX down 38 and the front month future up 30. So that's cents. So they are slowly converging with each other, which is good. Now, for them to normalize, in normal terms where we have a sort of a slowly rallying market, VIX spot is below all the futures, and the futures line up in contango where the front month is lower than the second month, which is lower than the third month, et cetera, et cetera. So we are inverted right now. If things stay calm, we will normalize slowly, but we definitely have a long ways to go in that process. Meanwhile, what is going to happen with the market? Well, I watched an interesting TheoTrade video last night, which I want to point you to. I've been into TheoTrade lately in their videos. They've had some good stuff, which I think is valuable for you to check out. So let me just pull it up really quickly and just point you to it. I'm not going to like watch the whole thing with you, but I just wanted to show you. It's this video here. How far will the bounce go? And they talk about how these bounces are following certain trend lines. And I think they're looking at the 20-day exponential line and basically just saying that the market is moving back towards, now that we're kind of down below the averages, it's being pulled like a rubber band back to the average 20-day and 50-day moving average lines. And so the point that TheoTrade was making is that these major indices and thus the stocks, because the stocks are all moving in tandem right now, they are kind of being pulled just back towards the averages, but we're not seeing them go above the averages and actually break out of the downtrend yet. So as I said yesterday, downtrend is still in place until it's not. Let's just take a look quickly at the E-mini chart and see what it looks like. Well, that's the E-mini chart for 5 days, and it doesn't look bad, does it? We've gotten a little rally, and several people, talking heads, were coming on saying that we're going to rally for the next 2 days, and nobody knows what's going to happen in the future. Let me just say that once again, because sometimes they will lead you to believe. Remember, CNBC is a cheerleader for the market. Its sponsors are big banks and big companies who benefit from their stocks going higher. Always follow the money to figure out what's going on. And CNBC is owned by companies who benefit with the market going higher. And so they're always going to have an upside bias, just like certain news channels have a bias for one political party or another. If you were to look at some, a lot of the YouTube channels like, Tastytrade or me or TheoTrade or any of the others, we don't have a bias one way or the other because we're just traders. If we can make money with stuff going down, then we'll make money with stuff going down. If we can make money with stuff going up, we'll make money with stuff going up. In general, the market seems to rally over time. Over the long term, but if we look at the chart for the last year, the market has not gone up over the last year in total now. So that's that. So what do I have going on as far as trades right now? Well, I bought a bunch of stocks for that 1 day rally at the beginning of that day, and then I sold them out yesterday morning. So I'm back into cash for my main long-term positions. And UVXY, I rolled up my short to the 90.88 put vertical, which I ended up paying, I believe, $1.10 for yesterday. Let's see if it will show me. Anyways, I have a small trade on in UVXY. It's nothing big. It's just like a 6-lot put spread and another small put spread. Small short on in January, so it expires in 21 days, the 90.88 put spread. So I need UVXY below 88 in 21 days. So small trade on. Now, I know a lot of people have been very successful at getting long UVXY when we move down and then selling it out higher. I think that will still work. Obviously, we're still in backwardation, so there's still pressure to the upside big time. So don't get fooled into thinking that we're just going to go, UVXY is just going to go straight down from here. That being said, if we do have a continued recovery in the markets or they just move sideways, there is pressure on the VIX to go lower because it is at a very elevated rate still. 29.58 is higher than it has been, the whole, basically most of the year, most of last year, most of the year before, most of the year before. So there is pressure on the VIX to go lower, but we are in backwardation still by 7%, which means the pressure is to the upside, the bias is to the upside, the edge is to lean long in UVXY now. And I have this thing in my head from trading this for a while when the bias was to the downside that I always want to be short it, but I have to be careful because the bias is to the upside still. And that will only change when either we stay at the same place for a while and the futures really move up to meet the VIX and actually get there to being the same price as the VIX, or the VIX moves down and moves lower than the futures. With the VIX above the futures, we have a bias to the upside, and that will not change until something changes in the term structure. You can look to the term structure basically for everything here. All right, so Afria takeover, hostile takeover bid yesterday. You can see it's 632 bid right now. Let's see what the news story says here. I know it was a stock deal, and it isn't in play. I stopped with this one because I was having because of that short selling news. But with it in play here, we'll have to revisit it, I suppose. So let's take a look at news stories on Afria. It doesn't show there, but let me pull up the news story on it here. All right, hostile bid for pot producer Afria comes from billionaire Ohio family's new company. A newly formed U.S. cannabis operation backed by a storied Ohio family that has built a fortune in the retail business is making a hostile bid for a Canadian pot company with which it has done business in the past. Backed by the wealthy and powerful Schottenstein family, U.S. marijuana producer Green Growth Brands, symbol GGBXF, said late Thursday it is making a takeover bid for Afria. And we know Afria has been in the news for a really bad news story saying that they're basically cooking the books and all this stuff. GGBXF, let's take a look at that one. Here's the stock. I don't know much about it, but it's obviously gotten some loving with that takeover news. And Afria up a little higher. The MJ industry is kind of in a sick spot here. Tilray still hanging out, amazingly above 70. Remember, January 15th is when all these shares are supposed to come, are supposed to be allowed to be sold from insiders. So, Tilray has all these really good, they've been flooding the news wires with good news stories, but at the same time, they have this dilution event coming up. So it's like, which wins out, the news stories and the good news or the dilution event? It's hard to say. I know, for me, in a way, it seems like, and we're about to have the open right here. So if you have to go, I understand. You can come back and watch this video later after the open. The basic retailer thing would be like, oh, sell Tilray on Jan 15th because it's definitely going lower with the dilution. So that almost makes me think that we could see this move higher on January 15th because so many people think it's going down that, it can't be so obvious that every retailer here, every retail trader says, oh, Tilray is going down on January 15th, so let's sell it then. And then on January 15th, it just goes down and everybody somehow makes money. It can't be that easy, right? So I almost want to get long Tilray, a couple calls right before January 15th to see if a bunch of people get run over by shorting it. Anyway, Tesla up today, market rallying on the open. It definitely is a change of trend here after several down days. We'll see if this holds. E-mini's up 8 right now, which isn't a whole lot. UVXY up 38 cents. And we're just basically waiting for the VIX to normalize. And what it's going to take to normalize is less movement around from these indices. I was talking before how I thought that maybe after this big move down that everything would just kind of die and just sit in its place, and the realized volatility. Remember, realized volatility has been very, very high. We've been moving around like 2%, 3%, 4% per day for a while. That puts pressure on the VIX to go up, of course, but that can end now, and we could just sit. Usually when we have a big, big down move, the retail paper kind of dries up. So I'm expecting that we could possibly, things just slow down kind of, and we just kind of sit and not that much happens and volatility comes in. So be watchful for that, I would say. And but it's going to take a little while for the market to kind of figure out what's just happened and all this big drama that's happened over the last couple of days. People are keeping track of end of the year stuff. By that I mean there's tax selling, there's funds that need to rebalance, there's all kinds of stuff going on the last days of the trading year, and then January 1st will start a new year, and there's some stuff that needs to happen at the beginning of the new year too, and so we'll have to see what happens with the market over the next couple of days. But it would seem to me that things have to be less crazy than they've been the last day or two, because it's been really crazy the last day or two. And I would expect volatility to come in, because it's kind of like we had the huge sell-off, and then we've got a little bit of a rebound, and now the smoke can clear a little bit, and we'll see where we are. And that, I think that means that volatility will come in. Now, will UVXY, VXX go down? Well, that remains to be seen, because volatility needs to come in faster than the pressure on these futures to move higher. So we have two things offsetting each other, but until further notice and until the term structure rights itself, the bias is to the upside in VXX, UVXY. So you can tell the longs on StockTwits who heckle me for always being short that I am relating that the bias is to the upside today, and was yesterday, and is until further notice. All right, thanks for watching, and I will let you go so you can trade the market today. Good luck. The NASDAQ has turned negative here, but I would think that we might just actually get vol to come in here a little bit, and realize volatility to come in and not have the huge move today, and have things a little bit settled down. But we'll have to see what happens. Nobody knows the future, and if people tell you they know the future, then you realize that that's not the right person to listen to. All right, thanks for watching, and we'll see you in the next episode of the Short Vol Show live. Stay with me. Or, I'm sorry, watch next time. Thank you for watching.
Thank you for watching the Short Vol Show live.